Well, welcome back to Krown's Crypto Cave. It's a nice little Sunday morning over here from not Helsinki, Finland. Almost said that. Chicago, Illinois. Still getting used to that, actually. Elsa's sleeping right now, so she won't be hearing her angelic voices this lovely morning. But you get to hear my raspy lesbian voice. So we got a lot to talk about as far as the higher time frames go. Today, just like the last few days, most of the lower time frame stuff is actually going to take precedence just because, well, realistically, that's where price action is actually moving around right now. Higher timeframes mostly unchanged, but the macro timeframes now are monthly and quarterly going to be closing relatively soon. So we'll be talking about that in the more long-term analysis because, well, it is a Sunday. So with that said, I would like to wish you the best of the best, the happies as always. A nice little binge morning on a Sunday morning like this. And let's initiate the teleportation. I'll see you in the live scene, baby. There it is. There we go. And into the fray we go. Bitcoin on the daily. And Bitcoin, once again, heading back down to our lower kind of order block on the very low time frames right here. And I suppose we'll start off with the lower time frames. Just this blue box territory, once again, as we spoke about yesterday, once we saw all the momentum oscillators come back down, we sort of targeted a move back into this region right here, about 98.50, 97.50 into this nice little pocket right here. And now we're doing the exact same thing that we've been doing for the last about week or so. Sorry, not week, but actually a little bit more than that. About 2 weeks, where Bitcoin comes down in this region, and then we play out a piss poor bounce. And as you've noticed, each and every high on this bounce has gotten lower and lower and lower. Starting off with this guy right here in the more recent history. Putting in a high right around about 10.9, 11,000. Then we had this guy right here after this nice test back down into this order block right here. And this one only gets up to about 10.4. And then we get this next one more recently, and it only gets up to about 10.3. And then we get this one right in over here, and we get to play the game once again. And while I don't necessarily have a target for this bounce, I would say, 10.2 to 10.3, anywhere around there kind of makes sense. As long as Bitcoin just continues to make these lower highs, it does make the lower time frames certainly err a little bit more on the bearish side, of course. But as with anything, until we actually break the trading range on the lower time frames, I don't really have anything new to add, so to speak. And I'm even going to get rid of this trend line right here, as realistically, the next sort of, I suppose, breakout trade that I could really look at on the lower term time frames is any sort of a close below this 98.50-ish region right here. I'd target a move all the way down to our lower pocket right around 9,400, 9,500. So about what, a $300, $400 trade, so not bad on the table. And then to the upside is a lot more tricky. I think the obvious trade would be a back above 10.3 because that is where we put in this last lower high right here. If that were to happen, then I could target a move about $300, $400 higher to the 10.6, 10.7 region right around here, and likely gets a chance to have continuation. But remember, this is kind of the time right now where it's a little bit more, in my opinion, it's a little bit more worthwhile to not have any positions. And I've been pretty much flat as far as my actual exposure goes for the last week and a half. Really have no interest in having like legitimate deltas on any of my positions right now. I'd rather just kind of sit back, wait, and let price action kind of unravel itself right here, because we're coming to the culmination now of almost 3 months of price action consolidation, which is building up a massive case. And I might have even forgot a few massives in there. The last time that we built up a case this big from a Wyckoff perspective was actually in this region right here during December to March in late 2018 to early 2019. Before this massive explosion for a 4x gainer to the upside. The time before that was this 3-month consolidation right here from, August to November, before about a 50% reduction in price action to the downside. And then, of course, the times before that, we'd have to go back a little bit deeper into history. But we do see that historically speaking, Bitcoin does like to play out these long form consolidations, and the breakouts and breakdowns from these areas are fucking unforgiving. I mean, like we saw right here, this was basically a halving Bitcoin, the Bitcoin halving essentially over the course of just like a few weeks really, and then to the upside, it was done over the course of a few months, but. Again, my point is that right now, if you don't have a position, there's certainly no dishonor in having no position right now. Like I said, I've had no position, and I still have positions on, but I have no real exposure. Anyways, okay, so let's wrap up the lower time frames just a little bit more, because there's not too much more to be aware of on here. I mean, we're getting rejected by the 4-hour 21 exponential moving average. Like I said, I don't have a target for this bounce. I just think that anything below 10.3 is a failure essentially. As long as we maintain these lower highs, well, the direction is down, and realistically, the next sort of test down in this blue box territory unlikely does hold it, and we probably do move down in the 9,400, 9,500-ish region right here. Although, like I said, I still wouldn't be trading for it. My next trade is either going to come out of the breakdown below 94.50 or the breakout above 11 or really 12,000. What I'd like to see right over here. Until we get one of those, I actually kind of want to be hands off. So yeah, all momentum oscillators on the lower time frames are actually pointed up right now. So I do think that this bounce isn't over just yet, even though it is kind of looking weaker right here. We see 4-hour Stokes looking like they want to cross the upside. 3-hour Stokes are already there. 2-hour Stokes going to be there as well, and hourly Stokes should be up as well, I believe. Although they are hinting at a cross downside, but realistically, I don't think that we have the momentum to break this guy to the downside just yet. I do think that this bounce gets a little bit more of a chance to get a little bit higher, and tentatively speaking, I'd say like 10,200 would be the next major resistance, so to speak. We do have this descending trend line right here. If you are trading lower time frames, something like this is where I'd be looking towards, and that actually does line up about perfectly with the white 200 moving average on that hourly dildo time frame. However, the hourly, especially if you've been tuning into content like this, not necessarily my favorite time frame, especially when we're in a 3-month long consolidation. The hourly is pretty much just a distraction. Really want to be focused on like the daily, 3-day, weekly, and perhaps even monthly, because we are going to be closing that relatively soon. But if you are so inclined, this is what I'd be looking at right here. And even if we do break above this trend line, it doesn't really do anything for me. We need to get back above 10.3. The reason why 10.3 is so important is because that's where we saw all these major moving averages kind of converge on each other before this last breakdown in price action. Actually, can I do that? No, that doesn't really help. But I just wanted to show that all the major moving averages, no matter pretty much which time frame you looked at, whether it's a 4-hour, whether it's a 10-hour, coming in right here, whether it's a 12-hour, coming in right here, whether it's a daily, coming in right here, a 2-day, 3-day, the same thing, coming in right here, and then weekly, of course, having the red 10 simple right around that 10,300-ish level. That all tells me that that is a major pivot on the market now, and as long as we're underneath it, as long as we're underneath 10,300, I do lean to the downside, and I cannot be bullish as long as we lean, as long as we're below 10,300. As a trader, as an analyst, you can say all sorts of crazy things like Bitcoin's going to reverse here, we're going to get back above 10,300, then we're going to go to 12,000, then fucking a million next year. No, today. Sorry, that's way too far out. That was way too unreal. That was way too realistic in a way that it should be unrealistic, if that would even make sense. Anyways, my point is that Bitcoin right now, just kind of still drifting sideways. I do think that this is likely to break at any given moment now. Realistically, I was actually looking for a break pretty much about this time, end of this week, which is pretty much today. We are on Sunday, of this week, so it is going to be wrapping up a little bit later at 8 p.m. Eastern time. So I would say that the chances of this actually breaking, whether it be to the upside or the downside, are exponentially higher. As soon as we passed about the 18th day mark in September, and now is really not the time, like I said, to be playing the lower time frames, just because you don't want to miss that next big move, because the next big move is likely going to be multiple thousands of dollars, as we've seen in the past. To the downside, there would be a measure move if we do break all the way down below 94.50, which would point all the way down to about 6,800 right here. Although I do think that it would be appropriate to entertain the bounces before that, and maybe they do become a reversal. The purple 200 exponential moving average is going to be coming around to 8,900. I think that would be an area of interest. The white 200 simple is going to be 8,500. Also, Gap Boys from June 13th, still waiting that. So I'd definitely be looking for a bounce there as well. 377 exponential moving average coming in right around 7,800. This kind of base that we saw in June of this current year. And then yes, if that one does fail, then I'll look for the full on measure move all the way down here to get hit. But of course, this is only going to be initiated if we actually do break out the bottom side of this, whether you call it a symmetric triangle or a descending triangle. Don't care what you call it. The bottom support is the same no matter which way you look at it. And this is why I don't care about English names on formations, but that would be about 94.50 right here. And to the upside, it's like I said, it's a lot more tricky. You could use this downtrend resistance line right here at about 11.2 and declining, but this is just a notorious trappy trap area. Really want to see this area taken out right here and make a new high over this $12,000 tick. If we could do that, then I'd instantly get bullish for a move to 14,500 and likely be on it. At that point in time, we can talk about it a little bit later, a little bit more fun stuff to talk about. But right now, when Bitcoin's looking a little bit more droopy, then it's more fun to talk about the downside, I suppose. Speaking of the downside, we do see daily Stokes actually looking like they want to cross the upside here. So if we do end the day above $10,000, I believe that we actually will see this cross the upside, and this is also going to be interpreted as a rejection of the bearish control zone, more importantly. And at that point in time, I do think that we'd probably see another test back up to 10.2 at the very least. Could that give Bitcoin the momentum to actually break the 10.3 level and make me a short-term bull? Perhaps, yes. And if that were to happen, what would I be looking at? Well, The thing is here is that if we could get back above 10.3, like I said, I'd immediately target a move towards about 10.6 to 10.750 right in this pocket. And then realistically, Bitcoin, likely does pull back off there, but I'd probably look for continuation all the way up here towards the 11.2, 11.3 region, or sorry, 11.2 to 11.5 region right here. Just give a just give a touch, a test to the top side resistance of this formation. If we're going to go test the supports, let's go. We might as well go test some resistances. Typically, is the general, the general sentiments on that. And that's like what, another almost $1,000 trade, or sorry, more than $1,000 trade from that from that decision point at about 10.3. So there certainly is a little bit of not just a little bit, but a decent amount of opportunity on the lower time frames. I'm just saying that right now I want to be looking at the next big one, which is just my disposition. People are going to have different opinions on that, and that's completely fine. Anyways, okay, cool. So I think we killed the lower time frames well enough. Let me just make sure. What about the 12-hour? 12-hour is still being held up by the purple 200 exponential moving average right here. If we were to break below it, again, if we were to even take out the last prior wick, I would say, or especially this guy right here, then extremely likely we are going to see a test back down to the bottom side of the range at 94, 9500-ish region right here. But again, that does not imply resolution on the whole. On the whole, I need to see either below 94 on a higher time frame dildo, or to the upside, a little bit more tricky. Above 11.5 could get aggressive, but also kind of in a trappy trap area. Above 12,000, feel very confident that we would see 14,500 and probably 16,500 after that. In fact, let's talk about that a little bit more as we transfer over to the higher time frames here. But here's the weekly. And I think just the easiest thing to see on the weekly is that there's a couple of points of interest above, if we were to break north of here. The first obvious one is going to be this breakdown from early January of last year, right around 14,500. And then the next one was a bull trap in, around the same time in early January of 2018 as well, right around 16 to 16,500 right here. I do believe that the volume profile should confirm this. And yeah, while we don't really see too much volume profile activity above our current region, anywhere above like 12,000 really, we do see a small smidgen of interest right around 14,500, and then again at 16,500 right there. Again, nothing compared to what we saw, during the 6,000, 8,000, or 3,000 levels here. So it's still likely to be extremely, extremely, extremely flighty. But you can see that the upside is a little bit more exciting, of course. I also do want to show just from like the general perspective, because a lot of people want to be the ones that like called it, right? They want to say, I called it, and then point back to some sort of Twitter post about their fucking call or whatever, however that goes. I don't know. But my whole thing is that as a trader, I don't really care about calling things. I care about trading for it. And when we look at something like this, it really makes me, think about just the opportunity that we could see, whether we break to the upside or the downside. But the greater picture is more important to me because, well, I do think that, it's just easier to play the upside, really. and when we look at something like this, I want to be asking myself the question, is it reasonable to think that Bitcoin could break to the upside here after a long consolidation? Is this historically relevant? Have we seen this in the past? And I would say, while I actually don't want to prime you with any sort of beliefs here, what I want to do is I just want to take everything off, get naked on the charts, and give you the raw data, and then you can decide for yourself. So thus far, we played out a consolidation from about late June, so really just July, August, and now September. So about 3 months now. This is coming off of about a 35% drawback. So we've come down 35% off the highs and consolidated for about 3 months. Is that consistent with what we've seen historically speaking from Bitcoin? Well, we can go back to the last bull market right here and kind of get, some sort of a general gauge, a standard to measure upon. And what do we have from this area in November 2015 to this one actually goes all the way to May 2016. So quite a long time. In fact, about 6 months. This one plays out a correction of about 42.5%. And, well, do I actually have that right? The wick on this one really makes it difficult. But as you can see, no matter which way I cut it, it's around 40% and does take quite some time. Then after that one, we go through we have another massive move to the upside. And then a correction plays out to the tune of about, let's see, on this one, about 38%. Sounds pretty damn familiar. And we spend our time consolidating for about 120 to 130 days, about 3 to 4 months. Sorry, that would be 4 months before the next major move to the upside. This next correction comes off that last little high, and we come down about about 33%, we could say. This one only takes about a month to play out. And then we do another thing right here. Another 35% retracement. Sounds familiar. Done over the course of about a month again, so pretty damn similar. And then we go on to the next one right here. This one playing out about 40%, or some odd percent. This one taking about 2 months. This guy riding over here. This pullback taking about 40% off price action, taking about a month and a half to resolve itself. And then after that, we pretty much just go straight to $20,000. Anyways, as you can see riding over here, the data I would say, without priming you, is pretty much consistent with what we've seen historically speaking, as far as Bitcoin's long form consolidations on its on its more bullish uptrends. And I would say that the longer the sideways consolidation, the bigger the case is built up for the actual next big break, I suppose you could say. So more sideways equals more up, I suppose you could say. Not only that, but remember, we have beautiful metrics made just for this purpose. We can go back on over here and go to the daily historical volatility percentile, which, remember, is a mean reverting indicator that is essentially it's gonna contract. It's naturally going to contract, and it's naturally going to expand. And when we get super low, there's only one way up. And when it expands, that implies that we're going to enter into a more volatile session, which implies essentially breakout. By the same token, when we're super up here, we can really only contract after that. So price action is going to go into a consolidation phase, which is exactly what we saw over the past 3 months. Now this area that we're in right now, we're almost in single digits once again. We have not seen this area on a daily since we are even below this area that we saw in May of this current year, before this massive breakout from this 5,300 base all the way to a $9,000 high right here. Time before that we were even this low, even a little bit lower than this, was March, before this massive breakout from this $4,000 base, to about 5,500 just a few days later. And then the time before that we were this low or lower was in November, before here. Now, of course, we still do have some more room to go, down here, but you can see that the trend has certainly been down. We've been below the moving average on this baby for ages now, and this is what you expect during your nice consolidation. So this is telling me that the next move is happening relatively soon. We just don't really have too much more ways to go here. I would be looking for the next move on price action to correlate with the historic volatility percentile on the daily, to get back above the moving average on this oscillator right here. Sorry, it's not necessarily an oscillator, but this volatility metric right here. And if we do that, then that would likely confirm direction for me. If we could see volatility expand while price action breaks some sort of critical level, that would be perfect for me. That's essentially what I'm looking for, and I'd be happy to construct positions around that. And right now, when we do see daily Stokes looking like the one across the upside, although it is certainly not confirmed as of right now, and it's a long day until we can actually do that. I would say that if we could actually confirm this, that that start to look a little bit better, at least for giving the bulls another opportunity to get back above 10.3. But that's kind of my cutoff point for being just even remotely optimistic for the bulls, even on the lower time frames. And as you can see right here, moving averages on the daily are starting to diverge and gain momentum to the downside, which is goosing the odds ever so more in the favor of the bears right now. And like I said, with each and every passing tick that we have below 10,300, those odds get goosed more and more in the favor of the bears. So yes, do want to be aware of that. Not only that, but what else did I want to talk about today? Yeah, let's talk about the monthly and the quarterly, which are going to be both ending simultaneously in about 8 days. Yeah, we only have 30 days in the month of September, so let's go to the monthly first. And the monthly, as you can see, to me, is just one massive consolidation, which is exactly what you should expect, right? This would be more healthy, and as far as the monthly goes, this looks pretty damn good, actually. We are going to see the red 10 symbol likely cross the upside of the yellow 21. The last time that we saw this was back on over here in April 2016, before this massive move from about $350 all the way up to $20,000, a gain of about 54,000%. Sorry, not 54,000, but 5,400%, something like that. I can't even say my numbers, which is very embarrassing. And all major moving averages have a positive slope. So I really like that look. That's a very good thing. Let's see if the 20 simple moving average actually does the same thing. And the 20 simple moving average is actually going to be represented by this silverish line right here. It is kind of flat sloped. It is flatline slope, but it's okay. And to me, a consolidation alongside the top Trollinger band is actually a pretty damn good indication. Now, as you can see right now, this is all orderly and okay as long as we maintain this formation. And what does maintaining this formation mean? Well, it means not kind of dropping out of unison with these higher lows and lower highs as far as the wicks go. So if we do take out last month's lower wick right around 93.20, even just wick below it, it really does greatly. It really does make the whole formation look like it wants to fall back down, and a target for that a natural target would be the 21 exponential moving average, which is actually synonymous now with the red 10 simple and the 20 simple right here, all coming in at low 7,000. So if we do break to the downside, $7,000 target is very reasonable. But for right now, as long as we hold this, technically you're not supposed to look at it as such, and it's supposed to look at it as a healthy consolidation on the higher time frames. But this, no one even looks at a fucking monthly, or the people who do look at a monthly, it's very takes a lot of patience, right? It takes a shit ton of patience, just because, well, you have to wait 30 to 31 days for you to get just one tick. But momentum oscillators on this time frame are good. We do see monthly Stokes very much erect, going to get into the bullish control zone for the first time since April of 2018. I mean, it's been a long time. Not only that, but if I could reduce this, maybe there we go. Looking at the monthly RSI, if we could actually just end things here, this would look like a strong reaction. It looks like it wants to actually float its way back up into the bullish control zone, similar to what we saw during June 2016 as well, where Bitcoin lived away from the bullish control zone for a very long time, like a year and a half at a time. And our first kind of test in there, first foray in there is rejected. Price action, pops up over here after the first pop from that bear market to bull market switch up. It comes down about 40%, 39%, whatever it is, same thing basically. And then we march our way upwards and onwards after catching the red 10 symbol and the yellow 21 all the way up to $20,000 from 350. Anyways, we do so far have a pretty similar reaction thus far. We got our first test up into this region after about a year away from it and gets rejected. This next one is the real tell. If we march our way on up and we maintain to have a positive slope when we get the next tick, then I'd have to be bullish. However, if we do see it get a negative slope or even lessen the degree of its slope from here, $7,000 is a very reasonable target for that, especially when we're looking at a monthly like this. Not only that, but I would goose the odds a little bit more as far as the macro timeframes. They are more on the bullish side. The bull's best case is the monthly, and we'll show the quarterly in just a second. That's a bull's best case, and I'll just kind of spoil the punchline right now. But the monthly accumulation distribution indicator on Bitcoin still very much positive. Now, yes, it did lose its slope a little bit on this last one, but that's okay. As long as it remains in a positive slope, that's all that matters to me, and so far operating well. So my point is that the higher time frame that we go, the better it looks for the bulls. However, lower time frames certainly on the bearish side. Which one do I put more weight on? Higher time frames. And of course, when we have the monthly ending relatively soon, and also the quarterly, which I'll show right now, ending at the same time, these are the things that I really want to focus on to get a general perspective of things. Now the first thing that kind of stands out to me on the quarterly chart is that we do see the red 10 simple coming in right around 7,000. By the way, of course, it should naturally, if the 20 simple on the monthly is going to be around that region as well. But looking at our momentum oscillators, we do see quarterly Stokes looking like they want to have a fresh cross the upside at the edge of the bearish control zone. So that would be considered a rejection of the bearish control zone if we were to do that, if we were to initiate that. Not only that, but quarterly RSI is still above the exponential, but really, really weak and not really too much to go off of as it is right now. My point is, though, is that if we throw in the Trollinger bands, we do see that this is a high level consolidation. In closing this quarterly dildo anywhere around $10,000, I would say is certainly more on the bullish side of things, just because whenever you consolidate along the top side of the Trollinger band, you typically try to push it after that, similar to what we saw right here after this first move to the upside, consolidate, and then boom, push. That's your strong trends. And we're kind of, it looks to me, if we were to close above 10,000, that's kind of what I'd be looking for on this guy as well. And of course, if we go back to the monthly, I believe we saw about the same thing. Yeah, we're just kind of some profit taken off the top band. But overall, that's still very much valid. Anyways, let me take these babies back off. What else I wanted to show is the bi-monthly ending as well. Let me make sure it is not. No, that happens in November, but bi-monthly we do see Stokes confirmed to the upside. Bi-monthly RSI looks like it's getting rejected by the exponential as it is right now, but again, not really too much price action history on that to get a generally good view. Anyways, we'll go back on over to our spot charts. Let's go back to the weekly as well. I wanted, or sorry, no, let's go back to the monthly. I wanted to show this as well. I think I should give credit to, maybe it was Crypto for this one, but basically he did notice, or I believe he was the one that told me that in a Bitcoin bull market, we've never seen more than two consecutive red months in a row. You can go back to, or let's actually go to BLX right here. We can go back to the genesis of Bitcoin. When Bitcoin's in an uptrend, we can see two red dildos in a row, but we never see more than that consecutively speaking, unless if it's a massive correction, more than like a 40% correction overall, of which I do believe you could make the argument that we've already kind of seen the damage done from this current one. And going back in time, you do see here that that is actually quite true. We don't see more than two red months in a row. Not that I think that this is like a primary consideration, but it is interesting nonetheless. And what is most important about this is that we already saw two red dildos right here from July and in August, and the September one right now is green, of course. But if we were to turn red, I would say that not only would that align with a retracement back down likely to the $7,000 level, but probably beyond. I do think that we have a massive bounce there, but longer term, you'd really have to come back into the argument that maybe this is actually just one massive bull trap right here, and we just set in a lower high, and we're gonna go come back down and test the lows and find out if we want to put in some lower lows as well, and that's very much valid. I mean, when you look at the altcoin sphere, it does in a lot of ways look like that. Let's actually go through the top shitcoins right here. This is Mr. Buterol. I mean, this is confirmed local high. This is a lower high right here, no doubt about this. And we're still living below the 21, which is kind of my general consensus for bullish or bearish. If this thing fails to break back above 225 next month, I'd be massively bearish on this, not just targeting to move back down to $100 or $110, but lower towards 55, 60, something like that. Now, of course, this is only if that were to happen, but I do want to show that this is, it's not one-sided right now. It's not one-sided at all. Monthly on Litecoin, even a little bit worse actually. Still fighting with the yellow 21 and the red 10 symbol. Same thing on this one. If we get into October and we just can't get above $80.50, bearish as fuck, coming back down to $32 and likely beyond. Well, at the very least, I'd be looking for a tick down here towards 51.5, but likely lower than that, because this would just look like another lower high, right? We need to maintain this as a low, and this is basically gonna kind of line up with kind of making a little bit more of a lazy distinction here. But if we look at this and kind of overlay it onto Bitcoin, right? Then we can say that as long as Bitcoin doesn't break that last month low, we should see all of the altcoin markets still hold in there and maintain, these ticks right here, at which point, you could still have a more immediate bullish case, I suppose you could say, as far as structure goes. Stellar, just not stellar at all, just complete destruction to the downside. Not really fair. What about Monero? Monero, lower high right here. Do we hold last month's low at 64.5? I mean, it's the same sort of structure here, albeit a little bit stronger than the other ones. Ripple me nipples, same thing about Monero, I'd say. EOS, absolutely terrible, below all major moving averages. Not that there's too many, but we could still use last month's low and then this month's high, as directional points for an actual breakout. Neo, what the fuck is this? Tron looks like it wants to try a little bit of a bounce in this region actually. Bcash, same thing, although this is still a lower high, no matter which way you cut it. It's going to be lower highs for quite some time. Zcash, the worst, actually not just confirming lower highs, but also making lower lows along the way. So very atrocious the more and more that we kind of go around this market. Altcoins certainly more on the bear side. Bitcoin, Jesus Christ, man, is this bounce going to get faded before it even, I mean, is that all that we're going to get? 10,100? Jesus Christ, man. Fucking, really bad. Yeah, it looks like we're going to be going down here. So let's see. Let's go back on over to our 4 hour. Let's see where this blue box is. Do we actually have the momentum to break it right now? Well, I guess we're going to find out right now. Jesus Christ, man. Now that cross the upside just gets faded immediately. There you go. Sorry about that one, bulls. Jesus, man. Jesus. And this is your lower high right there. God damn. Brutal. Fucking brutal. Again, the levels on the lower time frame still kind of are maintain the same, and you could even use this trend line right here. And you can see that we're wedging ourselves into a little bit of a formation. So we should actually get resolution on this on I'm looking at my time frame. I'm on Eastern European time, by the way, and this would imply the 23rd. So tomorrow at 1500. So that's I think 8 hours ahead of my Chicago time. So that should be tomorrow, or in the early morning. We probably do get resolution on this. And this formation right here actually technically is. I mean, what do you want to call it? Do you want to call it a falling channel? Do you want to call it a triangle of some sorts? I don't care what you call it. Again, you can kind of come up with the same sort of supports and resistances. That's what I'd say right here. And you can make measure moves on channels. They're not too good, but they can be done. And if we were to break to the upside, you can see right here, target towards 10.7 initiated. To the downside, a little bit more tricky. I would say you could even apply from here. And that's going to be the impetus for breaking us, well below 9,400. So that would probably be enough to make me bearish if we do break this one to the downside. I do think that we're going to have the momentum to likely break the whole formation of the downside. And like I said, this whole formation extremely mature in and of itself to begin with. So I am looking for resolution literally any time this at any time. And I do think that the odds of it happening are going to become they're already pretty fucking high from this current moment in time, but I'd be surprised if we were still in this range in a week from now. I'd actually be quite surprised. Anyways, those are things that I probably shouldn't say too often because I don't, they're not things that they're not really things that I think are important to trade off of. It's more so levels for myself. But and as you've seen in the past, the levels are pretty damn solid. The timing that that I'll give out sometimes good, most of the time though not good. Most of the time not good. So I would say that looks like Bitcoin's going to bounce off this area once again. I did not think you'd have another bounce in it, but fair enough. That's okay. Again, just playing out this range, and do we continue this up a little bit more? Maybe play out this bounce a little bit more to 10-100, 10-150, maybe. Again, we're in the middle of this range, kind of a bullshit range, really. Anyways, okay, cool. Okay, what else do we want to show? I do want to show this. So we've been speaking about this a lot on traditional markets, that traditional markets and Bitcoin actually do have a more strong correlation than they do not. And as you can see right now, traditional markets actually put in a little bit of a bull trap right here on the shorter term timeframes. I do think that we bounce up this level right here at about 297. Sorry, I'll actually do the analysis on traditional markets first, and then I'll get into the correlation of it. I do think that we open up the week on a bounce, maybe bounce back up to like $300, but probably going to be ranging between the 295 region and the $300. That's not very helpful. But what I want to show up here is that I am essentially looking for a massive bear trap, and there's two major areas that I'd have my eyes on. It's this area right here that we already played out, which would imply that we're gonna actually reverse back around here and just continue onwards and upwards. I think that's very possible. Or what we could see is a bear trap emerge from this area down here at about 275 is where I'd be looking towards, as I've been speaking about for the last month or so. I would only look for the 275 bear trap to happen if and only if we do violate this 294.5 to 295 level right here. If we violate that, even on a lower time frame, like a 4 hour, I will essentially ultimately target a move down towards here. Now, of course, I would have, there's going to be bounce along the way. Of course, 286.5 is going to be a major area of interest. We would also have 292, but I do believe that we would make our way down there. But ultimately, I do think that we'd actually reverse onwards and upwards. The thing is that if I check back on over here, the monthly, which will be ending, I guess, end of this week as well. Is this going to be the last trading day of the month? I would imagine. Bitcoin back above 10,000, as you can see. If we end at anything like this would be a pretty damn strong signal right here. Not only that, but we would see monthly Stokes still remain to the upside. We're going to see monthly RSI regain the exponential, most likely. And we likely get continuation upwards and onwards. That'd be bullish. Not only that, but the weekly looked pretty damn good as well last time I looked. And let me just make sure that I can confirm this. We do have weekly Stokes still up, and we can actually see a nice trend line forming here as well, coming in from these last local lows from right here and right here. And then also we do see weekly RSI regaining the exponential, although this is more consolidation is what it's kind of suggesting right here. This was a weird close on the weekly, actually, a very bizarre close. I'm not really sure what to make of it, but I do believe that you'd be able to likely play off this last weekly wick right here to the downside. If we do wick below, if we even tick below 297.5, likely do come back down and play off this region right here. And at that point in time, the retracement is going to be a little more nasty. Anyways, my point is that the direction that SPY picks here is very important for Bitcoin, just because we do see a pretty strong correlation between these two on the whole. And I'll just show it right here. I don't want to get like too, the thing is that when I start using like correlation coefficients and shit like that, people for whatever reason like to push back on that. But I think something that people just can't really push back on is just straight up overlaying the Bitcoin line chart with traditional markets line chart. And the reason why I do that is because, well, as you can see, on the whole, on the macro, they move together. On a day-to-day basis, fuck no. And that's where I think people get mixed up, because they'll show me a correlation coefficient on a daily and say it's not correlated. It's like, well, trends on a daily don't really represent the macro direction, do they? And I'm not saying that they have a correlation on a day-to-day basis. I don't think that they really do. In fact, I would expect the correlation coefficient to be somewhere around 0. But on the long term, on a weekly, on the general macro uptrends and downtrends, they seem to be pretty heavily correlated since essentially the beginning right here, both going up. Of course, Bitcoin going up a lot more. And then when they go down, they both go down together. Bitcoin tops out typically a little bit sooner, but they both played around the same time. Then same thing right here, move to the upside, a little bit of a consolidation, then another move to the upside, and then massive consolidation from 2014 to 2015, of which I remember during this time in traditional markets, huge correction. It's like the biggest correction that we've seen since 2008, right? Which is not really saying much, because we haven't really seen too many corrections since then, or especially recessions. And then of course, coming out of that area, we rally at the same time and top at the same time once again. And then more recently rallying again with each other as well. So if we do see traditional markets actually, which is by the way the blue line chart in the background here, take off from this region, I would be looking for Bitcoin to break this up as well. Is that they're very, 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 very similar on the macro. Why is this? Likely because it's the same people moving money around from these different markets is likely the real reason. I've been speaking with some of my friends who are heads, not necessarily heads, but like heads of the programming for some of these quant firms in Chicago. And one of the things that one of my friends noticed was he has some sort of a theory. He couldn't really get too deep into it, but he has some sort of a theory that it's the same people moving money around these markets because we see the same sort of spreads amongst all these different markets, from traditional to crypto. And I thought that was quite interesting. It does make sense, especially as we get more institutional adoption and just traditional market adoption, in a sense. I would be looking for them to, operate together until we get some sort of major, the next major economic crisis, and then see if we actually get bifurcation in Bitcoin. As of right now, we don't have any bifurcation. We have Bitcoin essentially following traditional markets, but that could certainly change. We've never seen Bitcoin we don't know what Bitcoin operates in a true recession for traditional markets, but I'd imagine that if Bitcoin's anything like gold, then it's probably not going to be good, because gold dropped fucking 35% last real bear market in 2008, which, a lot of people always say, Krown, that was different. We didn't have QE back then. No, well, we'll see what happens this time. Gold, by the way, which is also, I believe, correlated with Bitcoin, looks to me like it wants to create a trading range here between about 1530 and our current lows at about, I'd really actually extend this a little bit further to the downside, about 1470-ish region. But to me, gold is what Bitcoin did over the last few months, where it has a massive move to the upside, and now we're going to be trading sideways for a while. So while this does look like it wants to take back up here towards 1530, 1535, I wouldn't get excited for another trending move anytime soon. Higher time frame still very much good, monthly extremely good, but it's mostly consolidation and looks to me to be sideways. Same thing on weekly as well, and that's good. That's healthy. You want that if you're a fan of gold, I suppose. The only real issues would happen if we broke below like 1450, 1460. That would break structure and start to make this look like a failed attempt. But for now, all is well and good. It's just probably going to be a little bit more boring for the time being. Anyways, okay, let's get back on into Bitcoin. And let's talk a little bit more around the horn. Now, first and foremost, let's actually talk about this expected moves chart with regard to historical volatility. It's still squeezing to the downside, although we are kind of printing a little bit of a doji doodle right now, and the slope is lessening. So I would actually be looking for a potential, if we could close the daily here or higher, I actually would be looking for another test higher, probably towards like 10-2, at the very least on the lower time frames, which is probably going to line up with the second standard deviation right here. Actually, even higher than that. Wow, it's actually at the third. That's less than a 1% chance of happening. Holy shit, man. Again, this is what's very concerning to me. The third standard deviation, which represents less than a 1% chance of happening, is below that critical 10,300-ish level. It's actually $50 below that level. A little bit more than $50 below. So that's very concerning right now. It's extremely unlikely that we get back above that level, today. And I'd imagine tomorrow as well. again, and this is why with each and every passing, closure that we have below there, the pressure mounts even more. This is why it's important. Anyways, let's go check out the crypto fear and greed index as well. We're at a 37, literally hasn't moved in days. It's been fucking flat right here. It's not really all that helpful in the current, the current moment in time, unfortunately. I don't really have anything else to add right there, and it's more of a secondary consideration to begin with anyways, so if it's not like obviously flashing something in your face, it's probably not worth trading. Let's go check out some fundamental things. Let's go check out the Bitcoin difficulty ribbon. This is also something fundamental that I think speaks to actually the more towards the bullish case of Bitcoin. The difficulty ribbon speaks to the impact of minor selling pressure on Bitcoin price action essentially, and what you're looking at here, the ribbon is just a bunch of different moving averages on that, and the general idea is that when they converge on each other, then price action converges as well during these long form consolidations, especially coming off these massive parabolic highs, right here, and more recently in 2019 right here, putting in all the lows during those times. And then when it expands, when it diverges away from each other, that's when we're trending. And as you can see, that happened right here, to the upside, right here again to the upside, right here again to the upside. And more recently, we are diverging once again. If we actually pan this and zoom in, we can see that yes, they are diverging away from each other, and that has been a pretty damn good indication in the past of bullish activity from a fundamental miners perspective, which I actually do think matters. That's a very tangible fundamental that does change, that is dynamic and is documentable and is tradable and does matter. At some point it won't matter because we won't really have miners, because all the Bitcoins will be mined, but there'll still be miners running the blocks and everything. Of which I should probably stop talking about that because I'm not an expert in that area, but that dynamic will get changed over time, and we'll just have to reinterpret it, I suppose. But for now, and then in the following years, it's got plenty of time, I suppose. So we can still look at that. Let's also look at this. This is something new here. I've not really shown this before, but I think it's kind of interesting to look at. It's the VWAP. It's a volume weighted average price essentially. Now, of course, I use moving averages for the most part, but this is kind of another way of getting it, and you should naturally get about the same thing. But we can speak to a few different things here, right? You can see that, and it's this bottom oscillator right here. This is obviously price action, and what we're looking at is the volume, is we're looking at the VWAP ratio to show convergences and divergences away from each other, and then the interplay between the different oscillators on there, the different average prices on there, is going to be indicative of the actual direction of the asset. So what we're looking at here is the dark blue, the purple, and the pink, and when the dark blue is above the purple, and that's all above the pink, that's when we're trending to the upside, and we're all diverged away from each other. So we have this example right here, as you can see. We have this example starting from right here, the next major momentous move, and then more recently right here. And then, of course, to the downside, it's just the opposite. The dark blue is below the purple, which is below the pink. And you can see that happening right here as they divert away from each other, and more recently right here, and of course in the past right here as well. So what's going on right now? Well, we do have more bullish posturing on this. We have the dark blue above the purple, which is, the purple and the pink are pretty much one and the same. So I actually look at this area right here, to me, is a lot more similar to the first major consolidation coming out of the bear market to bull market flip before we really start actually trending. This was not like the trending behavior right here. This was a trending behavior right here. And this is very similar to what we're seeing right here, right? We see the dark blue leap above all the other ones, and then after the major consolidation, after the first pop, and that's kind of where I do think that we're at. It's also very similar to this area right here. It's same sort of thing. First major pop, first major trending identification that we're looking at, and looks to me like it has some some oomph to it, I suppose you could say. Other than that, I don't have too much to talk about on this, but it would be a little bit more on the bullish side. However, if we do see it, and I'm going to zoom in now, if we do see the dark blue start to head back down and then dip below both these guys, that would be a clear indication that we're gonna break this whole formation extremely bearish and stay bearish for a while. But yeah, just wanted to show that. Also want to show this because it is a long-term analysis playlist day, and we're only 43 minutes into this video, so it's quite young in its video life. But let me put it on a weekly right here. We'll go over to BLX index. And I want to show the matrix that we're looking at right here. So first and foremost, you see all these dotted trend lines. They are parabolic support trend lines for each and every market cycle in Bitcoin's history, starting off with this first one in 2010, 2011, anchored right here, gets broken in 2012, and that becomes our parabolic highs of 2013, 2014, as you can see. And that's kind of like been the general gist. We have this next one right here, holding anchored in 2011, 2012, or sorry, 2013. That gets broken in 2015. That becomes our parabolic highs of 2017, 2018 market cycle right here. Then we've been playing with another one recently. We've been playing with another one recently, and I would imagine that this last support trend line that's held up this parabolic market cycle right here, anchored in 2015 and 2016. Is a little bit more interesting to me because it seems to be more of like a phase decider in the way that when we've actually broken below it before, and it gets extended all the way throughout the history of Bitcoin through this guy right here, and then this guy right here, kind of anchored at these points. But basically, since the genesis in 2012 and 2013, or sorry, 2012 right here where it was anchored, it was a great place for traders to be a seller on, but for investors, and a phenomenal time to be an investor, right? Just buying anywhere below this region, you're a fucking legendary hero. And then once we break above this trend line, parabolic times. So the case that I'm kind of describing here is that when we're below this trend line, it is during major consolidations, and if you're an investor, well, typically the time to be at work, I suppose. And when we break above, that's when you're actually trending to the upside. And well, this can happen for years at a time. You see right here for the first time, and then we blow for a top, come all the way back down, and then we base along the same trend line. Trying to break for literally 2.5 years at a time, from 2015 all the way to 2017. And then we don't break it, and we go parabolic once again, blow for a top, and then come all the way back down, and then we break the same trend line to the downside. We get the same behavior that we saw in 2011, 2012 here, where Bitcoin, for traders, if you want to sell on this trend line, beautiful, but for investors, investing anywhere below it is long term incredible. And once we break above it, we get the same sort of behaviors we got last time as well. We go parabolic extremely fast. We double our price action from about 6,500 all the way to 14,000, more than double our price action over the course of the next few weeks. And in this trend line, which I do believe is kind of like our phase decider, is currently coming in right alongside the 0.5 Fibonacci retracement and also the yellow 20-month exponential moving average. So multiple confluences here. And this is a 0.5. Sorry, this is a fib retracement from the ultimate high to the ultimate low of the last market cycle, which was a pretty damn good support coming off the last one as well. As you can see right here, after this first major pop, let me actually draw it in. See this area right here, just coming in. It's not super perfect, but you get the idea. And then once we break above this region, like that is, you're in bull market territory as long as you're above that region right here. This was like the first major move out of this market. Well, we're kind of looking at the same thing here, I do believe. And as long as we're above this territory, which is also kind of like this last local high right here, you can see that it lines up with all these different things. It's the dotted trend line, the yellow 21, and the 0.5 Fibonacci retracement, and also this major prior high from April 2018. So all these things matter to me, and as long as we're above this, I do think that is appropriate to long term still be a little bit more in the odds of the bullish favor. However, if we do break below it, as you've seen in the past, then likely we fall apart. And by the way, the 618 fib is down around that low $7,000 target. Just saying. And in looking at this as a whole, and we really don't want to see this break below. Otherwise, like I said, it kind of starts to make everything look like a lower high on the macro. Ideally, we get some similar to what we saw right on over here, where we just play out a consolidation. This one taking, I believe, around the same time. So yeah, sorry, this one actually a lot longer. Sorry, a lot longer. I apologize. That is nowhere near. It's about 175 days, so about half a year, 6 months of sideways, but then moving its way upwards and onwards. Anyways, I think we beat all these horses to death today. Let's go over here to CMEs. CMEs did close the week below the red 10 simple. Not really too helpful here. They did close the week at 10,180, by the way, which, remember, there is a small premium on this right now, but not too much. I think it's like $30 to $50 as we are coming into the closure soon. It's going to be next Friday, so I'd imagine that we're going to see parity hit relatively soon. So spot prices being below 10,000 or just anywhere below 10,180 coming into the open of CMEs later tonight does offer up a little bit of an opportunity. If we do see spot prices still trading below when CMEs directly open, then I'd actually be looking to be a seller most likely. That's probably going to be the actual breakdown, at least for a move back down to like 9600-ish region. And potentially go lower. And if spot somehow resolved itself back up there, then I'd actually be looking to be a buyer. But ideally, we just come back up to that level and trade sideways and keep things kind of stable for the big event tomorrow, which I do believe is the opening of good old Daddy Bash coming back into this fucking market. So here's the thing: is that one of the other big reasons why I don't want to have a position right now is just because we do have a major event coming into tomorrow, which likely will have some implications with price action. So I just like to be safe on these sorts of things as events, kind of take the advantage or take the edge out of, technical analysis for myself. And whenever my edge is diminished, well, that means that I can't be as reliant on it. So I'd rather just, take those iterations out and not have to deal with them, which is essentially what I'm doing right now. Anyways, okay, cool. So I think I've killed everything right now. Probably just bored the shit out of you, but unfortunately, it's just my Sunday morning, and this is what I like to do. So cool. We spoke about all of that. I think it's time to wrap up this video. Lower time frames is kind of where all the fun's happening right now. Looks like we've had another test back down in this 98.50-ish region. The top of our more preliminary resistance is actually declining at 10,180. By the way, exactly confluent with the closure on CMEs on Friday. And if we get up above here on the to the upside, that doesn't do anything to me. We need to get back above 10,300, create a higher high over this guy right here, and get above all these major moving averages. If we could do that, then yes, looking for moves to 10.6, 10.7, and probably beyond towards 11.3, 11.5, maybe more medium term. But right now, as long as we're below 10.3, I cannot be bullish as a trader. I can't take that trade, and technically speaking, we're just creating lower highs as it is. If we break this blue box right here, I'd be targeting a move all the way down here, 94.50, 9,500 region. And at that point in time, do we bounce off this region again? Probably yes, but the bounce is probably short-lived. A failure to get back above still 10.3 is a failure indeed, and I'd be looking for moves much lower at that point in time. So again, still a little bit of a waiting game with events on the horizon, and I do believe that the FOMC is meeting again this coming Wednesday. So keep your eyes out for that, as interest rate talks are always going to move the markets, and I do believe that we see a massive correlation with that. It started recently, but we do see it. So I would keep an eye out for that, and any sort of talks of cutting interest rates should benefit Bitcoin and gold and silver and all these hard assets. But other than that, I think that's it for me. To kind of wrap up the lower time frames, I actually do think that we get another test back up here to 10,180, 10,200-ish region, and then if it gets rejected, well, I have to get fucking bearish again, man. That's going to do it for me. I do want to wish you a nice and happy, healthy, and peaceful, profitable Sunday afternoon, early afternoon over here. I'm going to go eat a shit ton of food because I'm hungry as fuck. Take care and see you soon.